Hello and welcome to the Byline, where we explore the strategies and technologies that are transforming modern finance and operations. I'm your host, Chris, and today I'm discussing how your business can avoid vendor invoice fraud. It's a problem that's far more common and far more damaging than most finance leaders realize. Many businesses think their standard invoice approval process is enough to protect them from it. An invoice comes in, a manager signs off, and AP pays it. Simple, right? But what if that process itself is the vulnerability? Today, we're going to explore why that process doesn't work anymore and lay out a strategy to make your business immune to this type of fraud. So, let's start by defining what vendor invoice fraud is. It's a category of schemes designed to trick your company into paying for something it shouldn't. And these schemes are getting more sophisticated every year. Let's break down the big four. First, you have your classic fake or falsified invoices. For example, an AP clerk might receive a PDF invoice from a company called Office Solutions Inc. It looks professional. It lists a plausible service like Q3 printer maintenance. The amount, say $850, is low enough that it doesn't trigger major scrutiny. The clerk routes it, a busy manager approves it, and the payment goes out. The problem is that you use a company called Office Solution Inc. with no S at the end. A fraudster created a lookalike company and sent you a bill, gambling that you wouldn't catch the small discrepancy. And they often win that bet. Next is the inflated invoice. This one is more subtle because it comes from a vendor you actually work with. Let's say you have a standing order for 50 boxes of supplies each month at $20 a box. One month, the invoice lists 55 boxes. Or maybe the price is suddenly $22 a box. Without a system that automatically compares every line item of the invoice to the line items on the original purchase order, who would notice? Your team is processing hundreds of invoices. That extra 10% can go completely unnoticed, and over a year, that adds up to hundreds or even thousands of dollars in losses. Then, there's the duplicate payment. This is low-tech but shockingly effective. An invoice gets paid. 3 weeks later, the same invoice is sent again. Maybe the invoice number has a single letter added to the end to trick a basic software check. In a world of paper, emails, and spreadsheets, it's incredibly difficult to be certain that you haven't paid that exact bill before. And finally, the one that keeps CFOs up at night: business email compromise, or BEC. A cybercriminal gains access to your supplier's email account. They watch the correspondence. They wait until a large invoice is due, and then they strike. They send an email from the supplier's actual account to your AP team saying, "Hi, we're undergoing an audit and need you to direct this payment to our secondary account. Here are the new wiring details." Everything looks legitimate. The email is real. The context is right. The payment is sent. The money vanishes into an offshore account, and your company is on the hook for paying the real vendor all over again. A single BEC attack can result in catastrophic losses. Now, the obvious cost of all this is the money you lose, but the damage runs much deeper. When fraud is discovered, your finance team has to drop everything. Hours, even days, are spent on internal investigations, filing police reports, and trying to get funds back from banks, which is rarely successful. Then there's the damaged vendor relationship. If you pay a fraudster who is impersonating your real supplier is still out of pocket. This creates a very uncomfortable situation filled with suspicion and mistrust, potentially harming a critical partnership that your operations depend on. And finally, there are the audit and compliance issues. A successful fraud attempt is a massive red flag to auditors. It proves your internal controls are weak. This can lead to failed audits, regulatory scrutiny, and a serious loss of investor confidence. So why do these things keep happening? It's because the traditional accounts payable process is fundamentally reactive. It's designed to process payments, not to control spending. An invoice shows up, and the only question AP asks is, should we pay this? But by then, it's too late. The oversight needs to happen much, much earlier. This process fails for three key reasons. It lacks centralization, making it impossible to see the full picture. It relies on manual verification, which is slow and prone to human error. And most importantly, The approval happens at the end of the process, turning it into a formality instead of a genuine financial control. The only way to truly protect your business is to flip the model on its head. You need to move from reactive invoice approval to proactive purchase approval. Here's what that looks like in practice. If an employee needs to buy something, instead of just going out and buying it, they submit a formal purchase request in a centralized platform. That request is automatically routed to their manager. The manager can see if the purchase is necessary, if it's within budget, and if it's from a pre-vetted, approved vendor. Only after that request is approved is a purchase order created and sent to the supplier. This changes everything. It means no purchase happens without prior authorization, which completely eliminates the threat of fake invoices for unauthorized goods. It ensures you're only ever dealing with legitimate, verified vendors. When you build this process on an automated procurement platform, you get even more protection. The system can automatically perform a three-way match, digitally comparing the PO, the goods receipt, and the invoice without any manual effort, catching any price or quantity discrepancies instantly. It can automatically flag duplicate invoice numbers. And with a platform like Order.co, you take it one step further. You're no longer managing payments to hundreds of different suppliers. You place all your orders through one system, and at the end of the week or month, you get one single consolidated bill from Order.co. This completely removes your AP team as a target for BEC attacks. There's no incentive for a fraudster to ask you to change a vendor's bank details because you're not the one paying them. The risk is effectively removed out of the process. That's the power of a proactive defense. And Order.co makes it simple. The platform centralizes every vendor, every purchase, and every approval in one place. With built-in three-way matching and automated payment workflows, Order.co prevents fraudulent invoices from ever reaching your AP team. Instead of chasing down vendor details or worrying about duplicate payments, you get a single consolidated invoice each month, all while your team gains total visibility and control. With Order.co, fraud prevention becomes automatic. So let's quickly recap the key takeaways. 1. Vendor invoice fraud comes in many forms: fake, inflated, duplicate, and impersonation, and all of them target weaknesses in your payment process. 2. The hidden costs go far beyond the initial financial loss, causing operational disruption and damaging key business relationships. And 3. The only effective defense is to shift from a reactive invoice approval model to a proactive purchase approval model, where every dollar of spend is authorized before the order is ever placed. Protecting your business doesn't mean just telling your AP team to be more careful. You need to give them a system that makes fraudulent transactions impossible. Order.co gives you the visibility, control, and automation to eliminate risk from every transaction and free your team from spending time on damage control. Thanks so much for tuning in to this episode, The Byline. If you'd like to learn more about how to improve your company's financial management, follow the podcast to get notified when new episodes come out. Until next time.